Hello friends, in our previous lecture we have started with the first sum and we have seen all the possible things that can be asked for the exam. So I may repeat that in exam all the things cannot come: journal entries, machinery account, depreciation account, effect in annual accounts. All that were the base for you. All things cannot be asked. The things which can be asked is from sum number 3. See, first sum is the base. Second sum cannot be asked in exam because it is very short sum, so you cancel that sum. Second sum you cancel because there is very short sum and it cannot be asked for 6 months. So in exam I am telling openly that from sum number 3, 4, 5, 6, 7 and 8 and 9, any one sum will be there out of these 7 sums. Any one sum I will ask from 3, 4, 5, 6, 7, 8 and 9. These are the 7 sums which are required for the exam. Now we are starting. Third sum, page number 66. On 1/4/12, Harun Dodawala Industry has purchased a machine for 2,75,000. Installation expense of this machine was 15,000 and carriage was 10,000. Company provides depreciation 8% per year as per straight line method. Here the percentage is given, so depreciation is calculated by using the percentage, not that C minus S upon N. This machine was sold at 20% loss of the book value on 31/3/15. Pass journal entries for 3 years and prepare only machine account for 3 years. Now these are the sums which can be asked for exam, because what they are asking only journal entries and a machine account. Depreciation account is also not required. So now friends, how to start the sum? Because here machinery is sold at 20% loss of the book value on 31/3/15, but the machinery is purchased on 1/4/12. So again 3 years will be given in every sum. How 3 years? From 1/4/12, first year will end on 31/3/13, then 31/3/14, then 31/3/15. So here machine is purchased in the beginning and sold at the end. So we have to find the values of the machine in the calculation from starting till end, and then we will take 10-20% loss and then we will sell it. So today you look at the calculation, how the calculation is done. Okay, the sums exactly are starting from today. So this is question number 3. We are starting our sum by writing the accounting years. So first year will start from 1/4/12. It will end on 31/3 for next year 2013. Then second year 1/4/13 to 31/3/14. Then third year will be from 1/4/14 to 31/3/15. Now as I said, important dates are to be written. On 1/4/12 machine purchased. On 31/3/15 machine sold. And depreciation is calculated as per rate. So 8% depreciation as per straight line method. Okay. Now first we start the sum by writing the 3 years which are coming in the sum. If we are writing these 3 years, then our journal entries will be easy and our machinery account will be easy for preparing. So first start with 3 years. Always there will be 3 years in the sum. Then write important dates, that on 1/4/12 machinery we are purchasing and on 31/3/15 we are selling. So we have to reach from 1/4/12 to 31/3/15 and then we can solve it on 20% loss. And then depreciation is charged at 8% as per straight line method. Now we are calculating. Okay. So how to start the calculation? First we are purchasing the machine. So purchase price on 1/4/12 is 2,75,000 2,75,000. 2,75,000 plus expenses. Which are the expenses incurred? 15,000 for carriage and 10,000, I think it is for installation. Sorry, I have written opposite way. 15,000 is for installation and 10,000 is for carriage. So expenses total are 25,000. So when we are adding expenses to the purchase price, we are getting cost price. So cost price on 1,412, 3 lakhs. And friends, this cost price is base for depreciation. So write in bracket base for depreciation. Why base? Because as per straight line method, depreciation is calculated on cost price every year. Depreciation is calculated on cost price every year. Now I may like to say, you look the previous sum, that after charging depreciation the value of machinery is coming down every year. So we have to reach from 1,412 to 31,350 by charging depreciation every year. Charging means subtracting. So minus depreciation. On which date? 31,350. Sorry, 31,330. Especially you have to look the difference of time period. See, it is on 1,4 and it is on 31,3, so total 12 months. But if there is such a date where there are not 12 months, you have to multiply the months also. That will come in upcoming sums. So always depreciation will be calculated on cost price. So 3 lakh CP cost price into 8%. So 3 lakhs into 8%. So every year depreciation will be 24,000. Okay. Now after 31,3, which date will come? 1,430. Balance will be 2,76,000. Again minus depreciation. Now depreciation will be on this date. 31,340. Again it will be 24,000 because always it is on cost price. So 3 lakh cost price into 8%. Okay. So 2 lakh. So now it will remain 252. Again after this date will come 1,413. Balance will be this much. Again depreciation 31,315. Again 3 lakhs cost price into 8%. And this is also the sales date. Okay. Now after this date there is no date because on that date only we are selling. So balance on 31,315 in bracket we will write sales date. Now suppose if the sales date is not on 31,315 before 1 month, 28th February. So here depreciation will come only for 11 months. See why 11 months? From 1,413 to 28th February it is 11 months, 1 month less. So depreciation will be 3 lakhs into 8% into 11 by 12, but that will come in upcoming sums. For instance, why this calculation is done, that you understand. That we are purchasing the machine on 1,412 and we are selling it on 31,315. So this much working is necessary because we need the value on 31,315. How much is the value after depreciation of machinery? 2,28,000. Now this 2,28,000 we are selling on loss of 20%. So loss will be subtracted. So minus loss on sale in bracket 20%. 20% of what? 2,28,000 into 20%. So 2,28,000 into 20% is 45,600 is our loss. So our sales value, we need sales value 2,28,000 minus 45,600 1,82,400. So this working is done, friends, for finding this sales value. And how to do the working, how to know the date, this is the base for your date. That on this day you are purchasing. Then first year is ending on 31/3/13, so 12 months depreciation. For finding the depreciation, as you know, always cost prices we have to find. So we have started with the purchase price, we have added the expense, so we are getting the cost price. Now this cost price is base for depreciation because depreciation is per straight line method, and when the percentage is given, always that percentage and that value will be for every year. See, every year depreciation is 24, 24 and 24. Why it is same? Because it is fixed installment or straight line method. Okay, so on 1/4/12 it was for 3 lakhs. Now after 1 year 24,000 is depreciation, so its value after 1 year, see, 1/4/13 will come, because after this date second year is starting, it is 2,76,000. Again this year is ending on 31/3/14, and again depreciation we have charged that again on this date, again on this date, I have not, yes, I have made this, it will be 1/4/14. Again on 1/4/14 its value will be 2,52,000. Again one more depreciation is required because on this day we are selling, so depreciation should be done till this day. Now 1/4/14 to 31/3/15, here see everywhere difference is of 12 months, so directly we are taking 88%. If the difference is less than 12 months, then we have to multiply the months also with them. So we have subtracted the depreciation. Now we are having no date after this. So on this day we are selling. Now how we are selling? By loss. If we are getting profit then plus, loss then minus. 20% of the book value. So book value is book value means balance. Book value means balance. See, in book they are writing the machine was sold at 20% loss of the book value. Book value means the balance. Balance 31/3/15 is 2,28,000. 20% loss it is sold, so 45,600 is the loss. So our sales value is 1,82,400. So this calculation is necessary for finding out the sales value. What is the simple method? Start from where you have purchased, then come till the date, come till the date of sales. Now till the sales date we are having 3 years ending. 3 years ending depreciation we found, and then we have come, then subtracted 20% loss, and then we have found the sales value. Okay, now journal entries. Okay, for that we have to throw date, particulars, then LF, then debit and credit columns. Okay, now we are giving the heading first year. First year we are purchasing the machine. See, we are purchasing the machine, so machinery is coming in, machinery will be debited, its book value, its purchase price will be on bank, and its expenses will be for cash. So entry will be machinery account debit to bank account to cash account. Now bank account will be the purchase price. Purchase price is 2,75,000. Cash account will have its expense 25,000, and total amount will be cost price 3 lakhs. B, machine purchased. Then second entry is regarding the depreciation on the end of the year. So entry is depreciation account debit to machinery account. Depreciation is 24,000. Again narration. B, depreciation charged. Again on the same day we have to close the depreciation account. So profit and loss account debit to depreciation account. Amount same, 24,000, 24,000. Being depreciation closed. So first year is over. Now again these two entries will be in second year. So second year. In second year, date will be 31/3/14. Entry for depreciation will be depreciation account debit to machinery account. Being depreciation charged. Amount 24,000. Always amount will remain the same in straight line method. Again 31/3/14. Profit and loss account debit to depreciation account. $24,000. Being depreciation closed. So second year is also completed. Now third year. Now in third year these two entries will come, but as we have written in the format, if machinery is sold in that year, that entry will also come. So 31/3/15, first we will give depreciation. So depreciation account debit to machinery, 24,000 again. Or you can see in your calculations also that every time depreciation is same. Being depreciation charged. Then on 31/3/15, profit and loss account debit to depreciation account, 24,000, 24,000. Being depreciation closed. Then last entry. Now last entry will be for selling the machine. When machinery is purchased, machinery is debited. When machinery is sold, machinery should be credited. Bank and cash account will be debited, and loss is occurred, so loss is debited. Because losses are debited, bank or cash account debit. You can see in our format also. Loss on sale of machinery account debit to machinery account. Bank or cash account will be debited with the sales value 1,82,400. Loss on sale is 45,600, and the machinery sold is of 2,28,000 after that depreciation. B. Machinery sold. Okay. In first year for purchasing and for depreciation, closing depreciation. In second year nothing was there, depreciation and closing depreciation. Whereas in third year, depreciation, closing depreciation and sale of machinery is there. So now journal entries are over. Now we have to give a machinery account for 3 years. So we are drawing machinery account. So just you have to look the entries and you have to post where machinery account is given. In yesterday's sum, depreciation account was there. So we have to look the entries for depreciation account, but today depreciation is not there. So we have to look only about the machinery. So machinery account, date, particulars, JF, amount, date, particulars, JF, amount. So these are our columns. Okay. Now we can prepare machinery account with the use of journal entries and without journal entries also. Now if you are looking the first journal entry, then it is for purchasing the machine in the first year. Machinery is purchased, machinery is coming in, so debit side. Again, due to depreciation, machinery's value is decreasing, so right on credit side. And the next entry is also regarding that depreciation account debit to machinery account. Machinery is credited for that. So if we are not having journal entries, then also this account is possible. How? First entry is for purchasing, and you think that machinery is coming in, so it will be written on debit side. Date will be 1/4/12. You will write to bank and to cash. In bank you will write purchase price, and in cash you will write the expense. So to cash on the same day. So 2,75,000 for the purchase price, 25,000 for the expense. Or else you read the journal entry. Machinery debit to bank and to cash. So on debit side of machinery to bank or to cash. So we should know without journal entry, which journal entry we should know. Now the next thing is to charge the depreciation. Now due to depreciation its value is decreasing, so value is going out, so credit side. Or you read the journal entry. Depreciation debit, machinery credits on credit side of machinery. Date will be end 31/3/30 because it is 1/4/12 by depreciation account. Amount 24,000. Okay. And third entry is regarding closing depreciation, but that depreciation account is not prepared, so we are closing the first year's accounts 3 lakhs. In the same line, 3 lakhs, and balance will be 2,76,000. This balance is written in the calculation also, and if you subtract also you will get the same thing on the same date by balance carried down. Now that balance is carried forward here, leaving one line 1/4/30 in the second year, to balance brought down 2,76,000. Again in second year we are just charging the depreciation, nothing else. So again charging depreciation will be on credit side, or else you read the entry depreciation account debit to machinery account. So on credit side of machinery by depreciation. Or else you think due to depreciation value is decreasing, so it will be on credit side 24,000. Okay. Now in second year nothing is there. Leave one line and take the total and find out the balance. Because machinery is sold in third year, second year nothing is there. So in calculation also you can find this 2,52,000, or else if you subtract then also you will get the same amount by balance carried down. Again leaving one line, start 1/4/14 to balance brought down 2,52,000. Now in third year, first we will charge the depreciation 31,315 by depreciation account 24,000. Then after charging depreciation in the third year, machinery is sold, so it will be on credit side. Again, if we are getting loss, then loss is credit side and profit is debit. Or else you read the journal entry. Depreciation to machinery. So machinery is credited, they are on credit side by depreciation. Then next entry is to close the depreciation. That entry is not required here. Next entry is for selling. What is the entry for selling? Bank debit, loss debit, machinery credit. So on credit side, bank and loss should be written. If we are getting profit, then it will be debited. If we are getting loss, then loss is credited. On the same date, by if you read the journal entry, then also it is possible. Or if you think machineries goes out, then credit side. By bank or cash account, 1,82,400, and loss also by loss on sale, because loss is debited to machinery, machinery is credited, so on credit side by loss on sale of machinery, 45,600. Okay, now nothing is there. Total machinery is sold, so both sides should be now equal. Because machinery is sold, so now it will not have any of the balance. On both sides, the machinery account should be equal. Let's check. Here it is there. Now here 24, 182, 400 and 45, 600. It is 250 soon. Okay, so machinery account is over and our sum is also over. Okay friends, so in this way you have to solve the sum, and as you know, in this sum all the things are not asked. Either journal entries or account or other things can be asked. All the things cannot be asked together. So that's all for today. Thank you so much.